Hi guys, this is Hector. Today is Tuesday, the 27th of November 2007. It's 3:30, 35 minutes past 3 p.m. London time. I've just triggered a short entry on the Australian dollar against the New Zealand dollar. It's one of the setups that I was following today. Let me try to explain what I'm seeing on my chart. The setup chart is the 4 hours time frame. It's basically the time frame I'm spotting this setup from. As you can see on the 4 hours time frame, we can clearly see a beautiful downtrend as per my 3 simple moving average condition. Okay, all of them pointing down, parallel to each other, etc., etc. Price nowhere near the 100. We have a nice downtrend line there in place. Also, if I draw my Fibonacci's from the last swing low, swing high, sorry, to the last swing low, we see that price has banked right onto the 38% Fibonacci retracement and the 116.50 double low. Sorry, 116.50 round number, and also of course the dynamic area of support and resistance. Resistance in this case, since we're in a downtrend. Moreover, throughout the last few days, we've basically seen a sideways consolidation range, okay, which is marked in blue in my screen. We had a little bit of a price spiked above the range top for quite a little bit there during the overnight session. But nonetheless, that perhaps could have been actually happened yesterday, but perhaps that could have been a stop loss hand, whatever. The important thing is that upon having broken above, it's dived back down into the consolidation area, and moreover, furthermore, later on we got the breakout in the direction of the main trend. Okay. So basically it's a typical ranging formation within a very nicely trending scenario, okay, in this case downtrending scenario. As usual, my trade plan, as usual, every time I see a range formation within a trending scenario, is to wait for a breakout in the direction of the main trend and trigger my entry with my typical breakout pullback continuation. Okay, now zooming into the shorter time frames, what we can see is we have the breakout here, and then actually let me zoom in a little bit so you guys can see that properly. All right, right there. We have a doji, okay, up on the breakout. We have a clean breakout, momentum breakout in the direction of the trend with a long red bar. Okay, it's the one I'm marking right now on my screen. After that, what we see is a doji bar. Okay, this doji bar I'm talking about, right up on the breakout. As you can see, a price, this bar opened right there, came back up, retested the range bottom, okay, that former double, even triple bottom at that level, and from there found resistance of previous levels of support, and from there it's come back down. And well, the current bar, as it made a new low right below the doji bar, okay, right there, I triggered my short entry at 1:15.21. Stop loss, as usual, is placed right above the pullback aspect, okay, which in this case is the doji bar in itself, a couple of pips above that doji bar at 1:15.43. And my final target, as usual, I'm gonna be measuring the whole swing, okay, the whole down move, previous move, in order to well, try to see where the projection of that move is going to take me, which in this case it takes me all the way down to the 113.65 level right there. Okay, I will move stop to break even. That's gonna be my final target. Okay, my level where I will be exiting this position. As usual, once we run the total width of the range up on the breakout level, which is actually takes me all the way down here at 114.72, I'm going to be considering moving my stop loss down to entry levels in order to offset a little bit of the risk, because usually when when a range breakout runs the total range width, we usually see a little bit of momentum die out, some positions being closed, and therefore we might see a retracement back up, at least a little bit of retracement back up. Okay, well, that's basically, guys, it's nothing but a typical range breakout trade in the direction of the main trend, okay, with a clear well, actually it is a channel, so I'm basically trading the channel, or price action within the channel, aiming for a new swing to the downside. Okay, so like I say, a very typical trading formation, nothing really special about this trade. You guys have seen me trading this type of trades many times. Alright folks, that's all for now. We'll be keeping you updated on this trade. Bye bye. Folks, this sector, it's late in the evening, just a final update. It's 9:30 p.m. London time. I've just come back home, checked the trade that I had open on the Australian dollar against the New Zealand dollar, the trade that I took this afternoon. This was my entry level, and was, well, as you can see, my stop loss has been hit. Basically, I was trying to try the breakout of the sideways range that I was spotting on the 4-hour time frame. Basically, in this downtrend, price for the last few days has been moving sideways, and upon the breakout, I decided to enter short in this trade, hoping to see a new swing to the downside, but it seems that price has decided otherwise, and like I said, my stop loss level has been hit for a minus 27 pips on this particular trade. Alright folks, that's all for today. Like I say, I think it was a good setup. I will still keep an eye on this one tomorrow morning. It's just too late in the day for me to continue or to consider new entries, but nonetheless, I think it was worth a shot, and I will reassess the situation tomorrow morning. Alright folks, that's all. Bye bye.